Tesla announced a 5-to-1 stock split on August 20th, which went into effect on August 31st. Tesla was trading at $2,230 right before the split, and on August 31st, the sky-high share price had fallen to a more affordable $446. Shareholders who only had one share before now had 5. Tesla had increased its sales by 6 times over the previous 5 years when it announced the split, boosting total revenue from $4 billion to $24 billion at the end of 2019. The company's gross profit has risen from $924 million to $4 billion. At the same time, production of Tesla's more expensive models declined from 17% of all vehicles manufactured in 2019 to 15% in the first quarter of 2020, while Model 3 and Model Y production gained 3 percentage points. In this video, we're going to be analyzing the information out there about the stock split. Will it happen in 2022? What's the exact date of the split? Keep watching to find out. Stock splitting was done to show how products could be made more accessible. It not only allows investors with limited funds to participate, but it also generates excitement among buyers looking for an affordable luxury product. Tesla lured investors by lowering the entry threshold while maintaining the same high standards, giving those on the fence more reasons to buy than previously. It had a cascading impact and was a terrific stimulus for the business. In China, the Model 3 was well received and quickly became the best-selling electric vehicle. Similarly, in the United States, the Model Y debut sparked a surge in demand that was far greater than the desire for the Model 3. Finally, the stock split produced the idea that Tesla products are affordable, and demand skyrocketed, benefiting both the firm and the stock price. Elon Musk felt that Tesla stock was too expensive last summer, when it was about $1,300, and a greater portion of the public should be able to acquire Tesla shares. That revelation was quickly followed by a 5-for-1 stock split. Tesla stock is approaching similar levels after 15 months thanks to a stunning gain this year. However, this has fueled speculation that Musk will introduce a new stock division to cater to regular investors. The analysts and investors are divided over the speculations, and while investors are hoping for a similar split soon, some analysts claim that Tesla valuations do not make any sense. True, Tesla is worth more than all other automakers combined, but at current valuations, its price-to-earnings ratio is 50 times higher than any other competition, and Tesla would have to be in business for another 20 to 30 years to catch up. To add to what we've said, analysts estimate that Tesla will need to sell 31 million cars by 2031 to justify its current price tag. Traditional valuation measurements, on the other hand, cannot be used to compare a company like Tesla to original automobile manufacturers like Ford and Toyota, according to the opposing viewpoint. Intangible assets such as Tesla's branding, patents, and goodwill should be factored into Tesla's measurements and price forecasts. The argument is that Tesla is a technology business posing as an automaker, and that the value of Tesla's data has enormous potential, as data applications might include artificial intelligence, software services, and other services. During the Q4 results call, Tesla is encouraging investors to ask questions. Tesla will respond to the most popular investor questions. Over 10,000 stockholders representing approximately 1.4 million shares have already asked and voted on the queries. The most frequently asked questions concern free cash flows from capital expenditures, the quality of Tesla's customer support as the company grows, the launch of the Cybertruck, the current volume of cells, and the stock split, as many retail investors believe it is difficult to buy Tesla stock for more than $1,000. This quarter, Tesla is focusing on increasing its manufacturing capacity. Tesla is assuring that they have enough liquidity to support manufacturing with a 40% predicted expansion. According to the firm, Tesla produced 305,000 automobiles and delivered the majority of them. The estimated EPS is $2.35, which is roughly double the EPS from the previous year. The revenue is expected to reach $16.65 billion, up 55% from the previous year. Tesla's 5-for-1 stock split was clearly favorable to both the firm and its shareholders, and it's clear that Tesla's market share has risen to similar levels. But this is due to its increased sales, profitability, and attention for its forward-thinking goods. Although a stock split doesn't always elicit such a response, the company's fundamentals govern the conditions and price action that follows it. It was a win-win situation for Tesla, as the company's products and stock are both popular among retailers and ordinary people. Some analysts support a share split simply because it's a marketing tactic, and adding more shares could assist improved executive compensation. Despite the fact that perception of shares being more affordable is based on perception rather than reality, investors are attracted to the idea of purchasing shares at a lower price. According to analysts, Tesla will see a parabolic increase, and any near-term split will be beneficial for the stock as long as the company keeps its genuine character and retailers' trust in the brand. To begin, it's critical to comprehend what a stock split is. The most important thing to remember is that it does not make investors any wealthier and does not provide any additional capital to the company whose shares are being split. In simple terms, a stock split is the dividing of one share into many shares with the same total value as the original share. Similarly, dividing existing food into 4 or 5 pieces is comparable, but the overall dish remains the same. Similarly, before and after a stock split, shareholder ownership does not change. Companies split their stock for a variety of reasons, one of which is to make shares more accessible to individual investors. This makes the company's shares more liquid and available to a wider range of investors, which is expected to enhance the stock price, though this is not always the case. Elon Musk currently has over 64 million Twitter followers. Not only that, but all of Musk's businesses have a sizable online following that eagerly awaits impending developments. The 12-9 hypothesis is a new notion that has been circulating on Tesla Twitter. The 12-9 idea is based on Tesla supporters and investors on Twitter claiming that the EV maker is considering a stock split on December 9th. The hypothesis was sparked by Tesla's recent stock split. Elon Musk tweeted on May 1st, 5/1, that the Tesla stock price was too high, and Tesla announced a 5-to-1 stock split the same year, resulting in a big price surge for the EV maker's stock. Due to inflation, $420 has gone up by 69, Musk posted on Twitter. Adam Hoof then pulled some number magic, adding 420 to 69 to get 489, then adding the first 2 digits again, 4 plus 8 to get 12, and then leaving the 9 alone, and then boom, 12-9. Adam's suggestion was most likely intended as a joke, but Tesla Twitter embraced it and ran with it, looking for 12-9 in all of Musk's and Tesla's operations. Some Twitter users feel it was more than a coincidence and that Musk sent a cryptic message to his followers announcing the stock split. The 12-9 hypothesis uses this as a starting point to try and anticipate Tesla's future stock split. The theory's origins can be traced back to an Elon Musk joke involving his 2 favorite numbers, 420 and 69. Some of the supporting details were so detailed that the notion began to appear plausible. Elon Musk, on the other hand, debunked the hypothesis during a recent visit at the Wall Street Journal's CEO Summit. When asked what will happen with Tesla on December 9th by the moderator, Musk simply replied, "Nothing as far as I know." Musk added, I don't know where this came from. This is one of those memes that just came out of nowhere. Nothing that I'm aware of. Nonetheless, something could happen that I'm not aware of." Musk's statement finally put to rest the 12-9 theory. However, as Musk likes to say, fate loves irony, so if anything indeed happens to Tesla on December 9th, we will surely be on the lookout, regardless of whether the company is split or not. Owanda analyst Ed Moya sees Tesla's prospects improving after the company announced plans to sell cars to Hertz (HTZZ) and Uber (UBER), noting that other worldwide rental firms will likely speed such orders. "I was wrong when I said $1,000 wasn't going to happen," he notes. Tesla's rise has been meteoric. They were able to adapt and deal with the chip scarcity better than their competitors. While some argue that the stock's valuation is unreasonable, the stock's momentum does. A new split will be beneficial for the company, which Moya believes will hit $2,000 in the near future. They have a cult-like following among retail investors, so if they separate, investors will embrace it and the stock would surge. So what do you think about the split? Are you in support? Comment down below.